So hello once again traders and hopefully new potential traders. Patrick Maldonado here. Welcome back to the TCE Trading Podcast, and again I'm very glad that you are joining me once again. I've been really looking forward, as I said in the last episode, to make this podcast to bring new topics for you guys, to bring something to the community in terms of free content. So something I forgot to tell in the last episode is that I'm intending to do this podcast once a week. So that's one episode per week, and I'm aiming to pretty much upload it or make it available on Thursdays. So if you are very interested in learning more about trading, about the financial markets, increasing your financial awareness, then just look at Thursdays, because that's pretty much when the next episode of the podcast is gonna be available. Now, another thing that I wanted to say is that at first we're gonna really be focusing on education. And this is to pretty much lay a foundation for trading, a foundation for the financial markets, for all of you guys who are really interested in trading and learning more as we go. And I think this is very important because a lot of you might not have the same level of knowledge as other people that are joining. So what I really want to do is to make the first episodes very focused on this kind of education side of trading, knowing more about the market so that you can all level up. And then after that, as I said in the last episode, what I want is to focus on other topics, really like mindset. Trading psychology is huge, not only for trading. It's really about the mindset that when you are approaching different goals, when you're approaching different challenges. It's all about the mindset. If you're creating a new business, if you are actually doing sports, something that I was gonna say is that in a lot of books that I've read, they always compare trading to being kind of like a sports guy. Why? Because it's all about performance, and you might think that performance is only about your body, but it's mainly, if not almost entirely, about the mindset, to be honest. And apart from that, what I really want to do is to start bringing guests and discuss some controversial topics, some trending topics, how it relates to the financial markets. To be honest, I think that's gonna be really cool. So for now, we're gonna be laying the foundations, and as we go, we're gonna start putting all of these topics on board. So in any case, in today's podcast, what we are gonna be covering is basically what is trading, right? And what are future contracts and CFDs and all these, because it's information that you need to know. And I know that a lot of people who are not financially aware, they're not gonna know how trading works. So this is basically what I'm gonna be trying to do, as well as talking about the different types of market you can trade in the comfort of your own home or wherever you are. So if you haven't subscribed to the podcast, please do so. It is really appreciated. So what is trading? So I'm gonna be reading that definition of trading in Investopedia, because that's a very, very useful source. So if you don't know Investopedia, please go ahead. If you have more questions about trading, about different definitions and so on, that's the perfect source for it. So trading is the process of buying and selling different financial assets in order to profit from the price difference. So what you want to do is really, if you are buying something that's at a low price, you want the price to go up and then you want to sell. But also what you can do, and I'm gonna be explaining more or less, you can do this. What you want to do is, if the price is very high, you can also short or take a position to the downside. And if the price comes down, you can buy back and you can get profit from that price difference. So this is the difference really between investing and trading. In investing, you are looking at the longer time frame and you are waiting for whatever you put in to grow in wealth. Whether as in trading, what you really want to take advantage is of that volatility. You want to take advantage of that price difference. So now you may be asking, okay, how can you do that online without actually getting any asset, right? And I think that's something that is a common question between a lot of the people, even some of my students. So I want to say that there's kind of two concepts of trading. There's that standard concept that you have an asset, you have some goods. Let's see, you can have gold, you can have orange juice, you can have rice, you can have whatever you want, and you can sell that, right, to someone. So you are the seller, you have the product, and then you find a buyer who has cash, takes the product, and well, that's trading. Now, the other concept is the online concept of trading. So we need to take a look at different definitions so that you can really understand why is this possible and why is it necessary, to be honest, for the economy. So the first thing that we're gonna take a look at is what are future contracts. So again, a lot of you may not know, and I'm gonna read a full definition before explaining a little bit further, but a futures contract is a legal agreement to buy or sell a particular commodity or asset or a security at a predetermined price at a specified time in the future, and that's the key, time in the future. Now, what this tells you is that you're gonna have a contract saying, I'm gonna buy gold, I'm gonna buy oil, I'm gonna buy rice at this price in the future. Now, why is this important? You know that by now you know that I studied aerospace engineering, so I'm gonna give an example on that area. Let's say that you are building planes, right? And you need a lot of aluminum alloy, so you need to buy aluminum. Let's say that aluminum price are very low, super low, right? So you want to buy more, but of course it doesn't make sense to overbuy, because then all of your profits are gonna go away. So what you want to do is to be exposed to this future contract, saying, okay, I'm gonna buy this big amount of aluminum in this case in the future. So and you do this because you think that the price is actually gonna go up. So what happens is that as the price go up, your position in this future contract is getting more and more value, right? Because you are buying at a lower price, so the price is actually going up. So basically what you are doing is hedging the market, so you're not losing anything. Even if you buy at higher prices, which is going to be negative for your industry, you can still profit from that position or from that future contracts, meaning that you are going to be equal. So this is a very important financial instrument for the entire market and for entire industries. Now, another concept that I want to talk about is CFDs. And you might have heard a lot, and mainly if you wanted to be a trading, most of the brokers, they offer CFDs. So what are these CFDs? They are contract for differences. And this is an arrangement made in financial derivatives trading where the difference in the settlement between the open and closing trade prices are cash settled. There is no delivery of physical goods or securities with the CFDs. Now, this is a lot of jargon, so what does this mean? This means that you can basically trade future contracts with other people before the contract expires, right? So in between the contract is expire and the goods have to be delivered, you can buy and sell with other people. So this brings huge opportunity to profit from the price fluctuations. And this is basically how trading works and why you can buy, what you can short, and all of this. So now let's talk a little bit more. Now that you know these concepts, you know how trading works. So what markets can you actually trade? This is another question that I get a lot, and even more with the new students, because they don't really know what they can trade. If you're completely new, you might know potentially stocks, you might know potentially about gold, but maybe you don't know the entire macro market behind. So I'm just gonna briefly explain the main markets and why are they important. So of course, first of all, we have Forex. So what's Forex? Is foreign exchange. Now this is the most liquid market, and I'm not gonna go into very details, but it's an important concept that you are gonna be needing in the future, regardless if you trade or not. What's liquidity and what's volatility? So basically, liquidity is how fast you can sell an asset without affecting the price. if a market or an asset is very liquid, you can sell or buy a lot, and there's gonna be a lot of people trying to buy and sell at the same time, so the price is not really gonna move a lot. In contrast, if you have a very illiquid market, let's call cryptocurrencies for instance, if you don't have a lot of people buying or selling, then if someone with a lot of money or with a lot of Bitcoin wants to sell, the price is gonna go down a lot. So that's basically volatility. So we have forex, as I said, it's basically currencies against each other, they different values, so there's opportunity to trade in there. We also have the stock market, which most of you are gonna be very acquainted. This is basically what the companies are, and you can own a piece of each company with shares or stocks, right? So this is a very, very huge market. Initially companies, when they're starting, they do these IPOs or initial public offering, where you can buy or be one of the first people to buy that kind of shares or stock. And then when they actually go out, there's the secondary market with, again, there's a lot of people that might buy, might sell, and this is where most of the retail trading really happens. Even institutions, they try to get in before, but if not, they'll try to get exposed through the market in these ways. Now, commodities, it's very, very diverse, and something that I need to say here is that we're kind of going from more liquid to less liquid, right? Now, commodities, you can basically trade pretty much anything you want, and this is crazy, because commodities, there's different sectors. You have energetic sectors, you have metals, you can literally, you can name anything. You can trade gold, you can trade silver, you can trade oil, you can trade natural gas, you can even trade orange juice, you can trade rice, you can trade cotton. Whatever is tradable, you name it, you can trade this. Now here, of course, you have to think about, even if you want to trade, because the less amount of people that are buying or selling in a particular asset, the more risky it becomes, because it's more volatile and it's less liquid. So it's a very liquid market, so you really have to be careful about that. And this is something that I really tell all of my students when they join the hybrid course, and I talk to them to really be aware of this. And finally, we have my favorite market is cryptocurrencies. Again, a very liquid in comparison to forex, for instance, but it's a very innovative kind of market. There's a lot of opportunity in there, but also there's a lot of risk. Again, it's all about this risk reward. You're not gonna get rewarded if you're not risking a little. So it's kind of a double-edged sword, but I love this market for trading. Sometimes it presents so many opportunities, and so, I mean, in terms of risk reward, again, you are risking just so little in comparison to what you can get. Some of the times, not always. But in any case, now here I kind of want to put a shameless plug, if you will, and say that if you take our course, we go into more details on these assets and how to trade them. We really go into the technical analysis. We go into knowing more specifics about each one of them. And what I just said during this episode is really just a brief summary, so you can understand what they are and so on. And another thing, something really cool that I think at the very least about the course is that it's very personal. To be honest, each one of my students will have a different kind of pathway. They will have a different approach, and everything that I say to them is really tailored to each one of them. And the reason is because at TC Trading, we take an approach with your decision making into consideration, right? A lot of trading companies, a lot of these kind of educational entities, they try to tell you, hey, you have to trade forex, hey, you have to trade stocks, hey, you have to trade cryptocurrencies. But what they don't realize is that people have different tastes for risk aversion, right? Some people are more risk averse, meaning that they don't want to risk, they are very conservative, while other people, they might want to risk a little bit more. Their risk appetite might be bigger because they want more money and they are willing to risk a little bit more. So that's super important. And I'll give you a brief example of one student. He was telling me that he loves Twitter and he follows Elon Musk, right? And of course, if you haven't heard about his famous tweets, he tweets about cryptocurrencies. He's basically an internet troll, which is amusing. But he was saying, hey, if I already follow him, why don't I start trading, for instance, stocks? Because I already hear news about it. And you can do it, if you want, if that's what interests you, you can do it. Every student has a personal path. They learn differently. They have different questions. They have different drives. And you have to take this into consideration. And I think that's something that really separates TCE trading from other educational services. But in any case, traders, and again, potential future traders, I hope that you enjoyed this episode of TCE Trading Podcast. I hope that you learned something new and now you are a bit more financially aware or financially educated. Again, that's my main goal. That's my drive with this podcast. This is why this is free for all of you, just to put my grain of salt in this world, just to help the community, just to help people who want to learn more about trading and financial markets. So please do not forget to give us a review and subscribe to the podcast via YouTube, Spotify, or iTunes. And thank you very much for listening, and I will see you in the next episode. Take care.